Ace, tweeting from Ace 52 Week High from Stock Twits and Twitter. Our website's acemoneypicks.com. I want to show you our tweet from October 17th when we called the top and we positioned ourselves to the downside. Well, I mean, a lot of Dow components are downgrading their or lowering their forecast earnings. So when the bellwethers and the Dow component companies report lower earnings or miss their targets, that means we're expected for a pullback and people are locking in their gains. So that's when I was observing this stock pattern, and I noted at October 17th at 12:43 to lock in their gains, and the pattern looks recognizable as we broke out of the pennant wedge as seen right here. As you can see, this pennant wedge just through the September and October periods. We broke out, and we failed, and we broke right back down within that wedge. Broke out again, but now that bottom support of that wedge is now considered a resistance. Time after time again, this always repeats itself. So, speed it up, and I want to show you a live chart. I said that we're going to pull it back to 1445, and then I've been keeping notes here. You can check me up on Ace 52 Week High through Stock Twits and Twitter, and you can actually see my charts that I post and a few of my blurbs of my thoughts and my trading process. And then I noted earlier this morning, since it's the anniversary, so I put my hedge, which is working correctly, and I'm watching that 1448 area for a bounce or break. Long story short, we are breaking down, and that's not the word. We are breaking down, and we're currently, as you can see, this is the S&P. As we broke 148, we're right here, this key line. Thought that was a hammer, that was a false hammer, and we just kept falling, bleeding further south. Okay, so as we stand, we're at 142.42, and it is 11:25 a.m. Eastern Standard Time. The S&P is down 14.22. About 1.98%, and it is 11:29 and counting Eastern Standard Time. So this is basically what I'm looking at. As you can know, this is the top trend line of the bottom of the wedge. I'll show you a larger view. This is only the 1 week, 10 minutes. In any event, our money flows, it's creeping downwards. You can see, obviously, the price pattern dictates it. Let's open it up a little further. 1 week, the 1 month. So this is our overall trend line, and I basically trade within channels. And you can see since the beginning, we started out our initial breakout was the beginning of June, and we traded within the type pattern. Okay, so this is the top right here. It's so significant. You don't realize it until it actually happens afterwards. But once you recognize it, you have the pattern recognition mentality. You capture it easy, and you can keep playing off those bounce, buy on the bottom, sell on the top, keep buying, or just hold your longs, such as Microsoft, your Googles, which, with the exception of yesterday's bleeder. So we called it 1460 in our previous post, as noted in Stock Twits, and we made a 20-point spread on this thing. Okay, so let's go back to the 1 month. As you can see, it gets a little sloppy. That's the top of the trend line. This is the bottom. Okay, now this bottom, which was support, it's now considered resistance. Look how ironic that trades right up to it on an upward pattern. I mean, every inch it kept going higher and higher and higher until it just cracked. Okay, and this crack right here is, at that time, was around 12:30, 1 o'clock. That's when Google's earnings were leaked out, and the markets just continue to sell off. And McDonald's reporting missed earnings this morning, as well as Microsoft. So you can see the bellwethers are reporting lower. MACDs are pointing downward. Money flows. Everybody's cap. It's a dreary Friday again. I'm back 20 minutes later, 10 minutes later, and we were not able to break this this key level. And that hammer was a false hammer, and it continued breaking down further. Looks like we're getting closer. We're at the low of the day. The S&P is currently trading at 1440.05, and we're down over 17 points. The Dow's down 151.16. I think my target's going to be reached sooner or later. All right, so we'll be back. Mind the time mark. Keep an eye on that, and you're going to see we're probably going to hit this area today, sooner than later. I just can't believe this is like almost like a repeat. All right. All right, we can't believe this is happening. We're down at an all-time, well, new low of the day, and it continues to keep going down. The Dow's down 172 points. The S&P is down 20 points. We already passed the 137 level, and we're at the 136 level. This is the point of hopefully a bounce, but you never know. The 50-day, mind you, on the S&P is right now 1433. I'm sure with this excessive selling, it's a clear reminder of ironically the 1987 stock market crash, and it's reminiscing. It's definitely ringing the bells. Look at this. Still selling off 136.97. We're bouncing up a little bit. 137.40, 137.05. I'm seeing bids at 137.40. Whether this is the bottom, I don't think so, because the money stream is still pointing south. We're not getting any flattening. MACDs are still negative, still pointing southwards. All right, I'll be back if we hit once we hit this trend line here. Oh, 5 minutes later, look at that. We bounced right off that line. It's pretty miraculous how trend lines work with pattern recognition. We hit 135.83, and now we're starting to bounce. Money stream's starting to point upwards. Looks like it's an oversold bounce. How far do we bounce? For a temporary short-term point, looks like we're going to probably either be at this level, 1440, or 1441, or the extreme case, maybe 1446. You can see the selling stopped. A lot of the fund institutions locked in their gains on the way down, and a lot of nervous investors are selling on the way down, because there's going to be some continued weakness. It looks to be, because this 1 week, everything's pointing southwards. You may get a little bounce here and there, but on the 6 month, we're still holding significant trend line at 133.56. But judging from Apple, they violated their 100-day moving average. We should start seeing some slight rebound. I'm looking at 1377. It's only down 2.5%, 2.17%. I think this has further downside to go, if it can, unless it can recapture the 100-day moving average by the end of the day. Okay, but I don't see that happening, and I think that we go down to 590. That's probably fair value once we get everything out of the way. That'll be a great buy point. The 590 is pretty much this gap area right here. Yeah, pretty much that gap area. So I'm looking around anything below. If you're a long-term investor, I start taking something off the plate just to lock in profits. Fundamentally sound, but there's just too many unknowns out there. I would use those proceeds to buy at a cheaper price. Okay. So let's go back to the S&P. And we're getting that nice bounce. Yep. We should get that nice bounce right off the 300-day moving average. How ironic, that's right on the line. We didn't even oversell yet. I don't know if we're at the end of the rope yet, but we'll keep you posted. Here's the latest development. We are at a new low. This is pretty amazing. We're at 22 points down in the S&P. It's 1:46 p.m. And it's still raining hard outside in New York City. And it looks like we're going to head down to 1433 in the S&P. We're going to retest that 50-day MA. It looks like we have a lot more. We have we have a lot further to bleed. We're working sideways, and then we're just bleeding southward. So we got a full candle below there. I really think that we're going to go break the support of 1433, and then 1426 is another crucial area. So start locking in your longs, take some profit off, and then with that profit, begin to buy sold off stocks like Microsoft, McDonald's. I just noticed a new short, PCYC. I just initiated a long position in short. I got in at 65. I've been hawking this for a while. And if you look at the PE ratio, it's just ridiculous. 450 times earnings. I mean, they only generate about $80 million a year in revenue, and yet it's a multi-billion-dollar business, billion-dollar corporation. You have 3 drugs though in the pipeline for phase 3, so keep an eye on this one. I think the intrinsic value should be around the 25. So I'm going to be holding this for a while. And I will be taking profits along the way because there's nothing wrong with taking profits. All right. We are in the final 20 seconds of today's day trading day. And just as anticipated, I didn't expect that we were going to go down this. We were going to stop right here, right at the 100-day moving average, excuse me, the 50-day moving average on a 6-month. So it just completely bled right through all day up until 3:15. And then we got some bids there, and it finally perked up a little bit at 14.35. The low of the day. You can see this distinct hammer right here. 1, 2. So the 2 bottoms were placed right there. So it looks like it's about 14.30. They have 14.30, 14.31, 14.30.27. All right. So not bad. I mean, we called it on 10/17. I showed you my stock twit timestamp, and I was looking at this point right here. I figured that we're going to get some kind of a bounce. As you can see, it's so funny. The trend lines are just unbelievable. That's why, and I strongly try to teach people on how to trade trend lines and pivot points and resistance. Okay, you can see that stutter step right there. 1, 2, 3, 4, 5 candles, and then boom, broke right down. When it breaks down there with conviction, and the next candle follows, that means you got a little bit more selling to follow through. And we predicted that if it was going to pass there, it was going to go fall down to the 50-day moving average. Now, forward looking, what are we looking at next week? We're probably going to get a little pop because we're going to get it's definitely oversold. But the overall trend looks negative. It's nothing sort of like the 2007 market collapse where we had Lehman falling apart, or 1987 market crash. It's nothing. I mean, it's just normal 24 points. We haven't had this much of a fall since beginning of June. So yes, we were lucky for the past 3-4 months. So what I'm looking at, we're going to break support around this area, and hopefully just stop right here at 1405 or the 1400 area. Some analysts today on TV mentioned that 1135 we're going to fall all the way down there. I hope not. I don't see it unless I see it on the 5-year. Okay. Yeah. All right, so that's what he's looking at, 1177. he mentioned 1170. That's exactly at the 50-day moving average. If it does that, that is the grand opportunity to buy again the very strong stocks, and just do what we normally do. We buy on a dip and sell out at the top, the trough. Okay, so now we got our mark points right here. Disregard all these points. So if it comes to that point, then that's a bargain. From now on, I'm gonna, for going forward, you got to remain cautious. The money stream is starting to flatline. The moving average on the money stream, it's downtrending. When that happens and it falls out of place, as you can see, it stutter steps. You're gonna get like almost a W. That W is almost identical to this right here. Look at that fall. Boom, boom, boom. 50-day, we got a little bit of bounce, so we come down a little bit more. And I think we're going to fall right down to this end. And that's where we're going to get that bounce. And we're going to go sideways pattern and then test that trough line right here. That trough line's right. This line right here. Okay? That is where you're going to be your resistance. This is your new pattern wedge. Okay? Your pendant triangle. You got to take in consideration of this one. If we break up here, then you're going to see limited upside to right about here. That is, in my belief, a complete head fake. Okay? So shorts are going to be adding on top of it. Overall, market conditions are good. Let's look at the weekly. Still strong. If we break that support line, 1425, as I mentioned before, then you're going to have to consolidate, go down sideways. It's going to be a tough next 2 months. So take note of that. Remain cautious. Lock in your gains on the bellwethers, such as Google, Microsoft. Even though I like all these companies, it's just time to take some profits, especially with our members that we've been in this since 2009. So I'll update my portfolio watch list and follow back acemoneypicks.com. And we'll talk to you guys soon. All right. Trade cautiously.